Alrighty, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and I apologize for yesterday's videos. I shot two videos yesterday, and the microphone was on the wrong setting, so I apologize. Sometimes I listen to this playback, sometimes I don't. And we put on a nice trade. One of the trades that I put on yesterday was a little bit of a hedge trade, and sometimes they work right away. So I took a portion of that trade off. Today I didn't take the whole thing off, but there was two reasons why I decided to hedge the trade. Sorry, I've got up our crypto index, but might as well go into the S&P. So let's wait for the chart to come up, as it looks like everything's slow for me today. Especially, I guess after the hours, I think I could probably use a reboot. But we talked about this yesterday. Come on, you can do it, Thinkorswim. We talked about how I basically had two reasons for putting on a little bit of a hedge. And I didn't buy puts, I didn't buy the VIX or anything like that. What I did was I went ahead and sold call spreads in the S&P. And there was two reasons for that. One was we're going to be entering, or I guess we are officially in the trading, the earnings season. And that's typically a very choppy time of the year, and especially as we've run into the earnings season, like with a full head of steam, and we're still overbought. So I could have put that hedge back on, the portion that I had taken off, considering that we only finished down about 6 basis points. So you could see over here, if you look at my screen down on the studies portion of the screen, if you look at the RSI, we are still way overbought at a 78. So this little dip that we got this morning, where we came in and we're down about 40 basis points, that really every little dip seems to get bought these days, and it just seems like there's really good strength right now. So we're still overbought, so I think that trade still will line up well. And again, I'm not really trying to overthink anything here. It's just, if you have a portfolio of names that you want to carry through earnings season, I think that with the S&P super overbought, and what this means, and I talked about this earlier today, is that basically any kind of bad news, this morning the excuse was that that bonds were selling off globally, and then that China doesn't really like our bonds as attractive as they used to be. Kind of makes sense too. I mean, I don't think there was anything major into that statement, but I think that caused a little bit of an excuse for sell-off. So I think that we can. So the just to nail the point home here is that I think we can expect that that if we get any type of bad news here, we're going to end up falling a little bit. With such an overbought market, right? It's going to be sensitive to the downside. Bonds, which again were the big story, look at where they finished. They only finished down the TLT, which I have up ZB, which is the long bond, but basically the same thing, only finished down 10-20 basis points. So everybody was talking about freaking out this morning. I was listening to Bloomberg radio, and again, I don't blame them for kind of making that their number one story this morning. But if we just bring up the TLT chart, so it is a break. Oh no, it's not. That's an open and that's a close. So it is not a break of the 200-day moving average, dividend adjusted. So much for that. I wanted to see how this shaped up at the end of the day to possibly put a short bonds trade on. I will wait for that signal, because again, I will know where I can. I want to make it an easy trade, and what would make it an easy trade is if we close below the 200-day moving average, and then I set my stop if we climb back above. Certainly, we saw some things in the morning once bonds opened up that way. Some of the equity yield proxies, and when I say that term equity yield proxies, what that means is your high dividend stocks, right? So your consumer staples, your utilities, your REITs, those started to sell off, but I think those mainly recovered today. Also the financials, which have been, so it's really nice to see the financials. I've been long XLF, and I managed to take a target today. And the reason why I've been doing that and peeling some off here is number one, we've got earnings coming up, so I want to be out of most of that trade before Friday. So I've basically got one more day. But financials were acting very strong today. They again did not close on the highs, and I said this in yesterday's video, which you probably couldn't hear. But I did say, when they didn't close on the highs yesterday either, I said, hey, as long as they continue to grind up, that's fine. They can move slow. I don't really care. What's been even better is the regional banks, which again they closed way off the highs. They were up about, I think, 2.5%, and they still closed up over 1%. But certainly they gave back a lot of those gains from midday, and that could have been there was a headline out about NAFTA, which was later not recalled, but basically I think the White House came out and said, hey, we've not changed any stance on this. So who knows if that headline had any merit to it at all. It did come out on Bloomberg about Canada saying that that deal is in jeopardy, but White House came out and said they kind of denied any change. Nevertheless, I think it's January. I may have the wrong date here, but I believe it's January 26th is when those negotiations may begin or reopen. So something to keep on your radar. But yeah, that was where the strength was today. What else was strong today? The metals and mining group. So kind of came in a little bit from the highs this week. Maybe did a little bit of digestion, but they were your best group. And this ETF is an equally weighted basket of metals and mining. So you've got your share of steel names in here. You also have your share of mining names as well as gold miners in there. So I'm still long Newmont. I've kind of just been sitting with this trade since it broke this downward trend line, and gold finished up just a touch today, up 25 basis points. So I think that trade, I have nice diversification on there, and I don't mind holding that one a little bit longer, and that's kind of like in my hedge category. And then I can continue to have some other nice long trades on today. So what to talk about first, besides the overall market? We talked about financials, because I want to get into today's option activity. These, I would say, what's been the hottest thing, I'd say the last 2 days, besides the financials breaking out to the upside, and we're seeing a hell of a lot of call buying ahead of earnings in some of those names. I will bring up the trades, but then I will talk about, so JP Morgan, BAC, that's Snap, BAC, and also a lot of Citigroup going out to January 2019. So this time we saw some further out calls today in a couple of the financial names. And before I go on to the next group, I mean, there's been all kinds of buying besides in the individual names. There's been all kinds of buying in the ETFs as well. XLF, KRE saw a nice call option on Monday. Yesterday, right before the close, we saw a nice order of KBE, the banks ETF. So, really paying attention to what has been hitting the tape has been very advantageous, just to kind of notice what they're buying aggressively. This was yesterday's flow in KBE. They came in right before the close, about 10-15 minutes, and they bought some February 57 calls. Again, that's the banking ETF. That's all banks. The difference between that and KRE is just regional banks, but KBE is basically everything. All right, so now to get away from financials, the other group that's just been absolutely on fire is small cap biotech. Since this JP Morgan conference started, it had such a shakeout on Monday. We came right back. We fell pretty hard on Monday. It was one of the worst performing groups, biotech, on Monday. And then what a difference a couple days makes. And it just shows how whippy the price action could be in the small cap biotech. Again, this is XBI, the equally weighted ETF. So you've got the larger names in there and you've got the smaller names. All of them get the same weight in the XBI ETF. So it's a real nice proxy for the whole sector. And this was Monday. We did fall into support, which was 84.40, and then Tuesday and Wednesday we've just been off to the races. So up 1.26. But if you kind of take a look at some of the names in here, GBT is one of them. This has been a name that we've been all over now for months. I mean, absolutely breaking out. And again, you had to be a little bit patient. So you had this nice move up here, and some sideways action. We almost broke out here, came back in, tested the 50-day moving average, reclaimed it, and then the last 2 days, wow, just huge gains, up 17%, up $8. So real nice move. I am long. I do not have a huge position in this. I've got a small position in this, but a bunch of people, a bunch of traders have this on in the trading room. So we've been all over this name for like the last what 5-6 months, I would say. And then this name folds. This has also been a favorite of ours. Caught a huge call buyer yesterday. I've been long in cash this name, and it kind of looks like that overall XBI chart where it fell. It had some pressure, fell into the top of value support. Again, that red line has been great support, and then just blast off from there. It was up 9% today. Huge call buyer today. I took this trade. I put this trade on. I got in a little bit more. I had to pay up a little bit more for this. I got in first for 185, and then I added some. I was lucky to get some at 180, and then this thing took off. I was able to take a target up at 245 today. So gorgeous looking trade today when they come in and buy these small cap names aggressively, especially the ones that we're familiar with. Really nice. And then there's been a couple other names too. A couple of traders in the room. I have not got involved in this one, NVX, but a couple traders did. This is a penny stock from 130 to 212. Huge move and huge call buying again. It always kind of puzzles me why someone buys calls and a $2 stock. I don't know why they just don't buy a lot of the stock for $2, but they bought some January 10 or January $2 calls for January 2. Let me say it again. January $2 calls for 30 cents, and they kept on buying them over and over and over. So real nice if you caught that one. And then there's one more, one that we got long yesterday too. So I am long a couple of these things now. ARRY did hit $14. We saw a lot of call buying in this one as well. Again, a lot of charts seem similar. This one didn't have such that big of a pullback. But yeah, so these a couple names again, and we're seeing call buying in each one of them. So it's not a mystery. I'm not a biotech expert. I just follow the tape, and if they come in and they start buying aggressively one of these names, AGIO was another name that we saw last week, and I don't need to know what drug they have in development. I don't need to know, what the pipeline is of if they're if you just follow the flow on the tape and notice how aggressive they're buying some of these. That's enough. You don't have to be an expert in this stuff, and that's what I love about following the real aggressive flow that we see on the tape. So very strong. And other groups, I did add one of my targets back in XLV, the healthcare ETF. Again, I like that because it's just such a cheap trade. The implied volatility in that ETF is like an 11. While I'm on healthcare, there was a nice call buyer right at the end of the day in Bristol Myers. If I could bring that up. Bristol Myers. Let's just see what this chart looks like. A lot of chop in here. So I love these areas of congestion, after a run up, chop, fell below the 50-day moving average, the purple line, kind of back and forth sideways action, and boom, a big call buyer comes in. And you can, let me just see if I can draw this, if Thinkorswim will let me do this second. But I think I can draw a pretty nice triangle pattern in here. Not perfect. Maybe I started that a little bit too high, but I would say right in here and then right here. So I like that. Look at that pattern. We'll see what happens when we come out of here on this side. But if you look on the bottom left of my screen, and you could see that there was 5,000 of these right at the end of the day. So 3 minutes. I like when they're sneaky like that. They bought the June 65 calls. right at the end of the day. So nice little trade there. That's $1.6 million in option premium. So pretty smooth looking trade at the end of the day. 65 is right around this VPOC up here. So that would be a nice target to possibly, if you put a trade on in Bristol Myers, that could be a target that you take right at there. Notice I also have this from some other study or some other trend line, probably back here. Oh, that's the gap. All the way back here is the gap where this name originally broke down. So some levels that it's got ahead of it here. A nice aggressive call buyer. All right, so other names today. And like I said, the names that underperformed, the Chinese internets finally took a break. KWEB was down 1.4%, but we continue to see call buying in JD.com. I'll show you the order flow in JD.com. And this is, I would say, one of the most active names. It was the March 40 calls, this particular order that was bought. And I would say in the Chinese internet group, this is the name that they keep coming after, is JD.com. And it's been performing really well. It's been hanging in here since it broke this downward trend line. It's just been up, and away. I would watch the recent high. It's getting pretty close to that of 49. This is what it hit before the last two earnings cycles ago. And then it stalled out here. You had a reversal bar right here. But again, has been acting very well, and they continue to come in and buy calls in this name. Other names, Take Two. In the tech space, I'll tell you, I haven't really talked too much about the Qs. There wasn't that many things. There was some movers, and I think some people did some nice scalping today. The Qs only finished down 20 basis points. They did get over. There was one area that I was looking at pre-market, and if you go to the 1 hour chart, you'll see what I mean here in the Qs. As we wait for that to come up. Oh, there we go. I knew that was going to happen. We did get back above value for the week, right? I mean, these are important levels to watch for the week. And we just got back above here. We closed back above. So that level to watch is 162.11. We spent most of the day inside, broke back inside value. So we'll see what we do. But it was pretty quiet. I would say we saw some decent put activity in the Qs, SPY, and in IWM. So they were protecting a little bit in using the indexes. And besides a couple plays, there was Take Two calls that went up. But I would say again they've been kind of staying away from tech in terms of the aggressive call buying. I think we saw Take Two and JD. I think those were the biggest things. We saw a small Nvidia call buyer for the week. I did not put that on the list, or I took that off the list because I try to keep everything on one page. We saw some light call buying, I think, in Micron as well. All right, so that's basically it. A couple other signals. There's a nice aggressive buyer in PNR. I took this signal today. Names on a 52-week high. A couple other names that we saw. More CCL. Some repeat call buying in names like CCL. Also FDC, which should be on here someplace. But they've come in a couple times now. Repeat activity. This is a name that I'm long. And I actually widened out my targets on FTC because you could see what it's doing. They keep going after the calls. So it just got above, if I could bring up the daily chart again, I apologize for Thinkorswim being so slow here. But it just got above, reclaimed the 200-day moving average the other day. If this will come in, there we go. You can see big downtrend, and we just got above this 200-day moving average. So 2018, I said in the beginning of the year, my New Year's resolution, try to let your winners ride a little bit more. So I keep widening out some targets that in trades that are really working, right? That's the whole name of the game. Big winners and small losers. ITRI. This was another one that I thought was interesting. They went ahead and they bought, I think it was the June 80 calls. Why do I need to guess? I have it right here. August 80 calls. So aggressive trade. And again, really interesting where they went ahead and put that strike all the way August 80, which is at the previous high. We see that a lot in option trading. We'll see after a name has declined, taken back a level like the 200-day moving average. We'll see them go ahead and buy calls. And where do they do it? back at a recent high. So pretty interesting there. I feel like I talk about my winners all the time, which of course are nice to do. One name that's dogging me a little bit is Pepsi. Originally when we put this trade on, I was able to hit one target, but it's just been kind of coming in here. It did hold the 200-day moving average, but this is a name that I'm down in a little bit right now. So that's one name. Another name which I had a little bit of news after hours, International Game Technology. I'm about flat in this name right now. I think it needs to hold. It's been iffy the last couple days, but needs to hold 27.50. So keep that name on your radar, as that one has been a name where we've seen repeat call activity as well. All right, thanks for watching today's video, and have a great night.